The money for a mortgage does not exist until the pen touches the paper. No saver funded it. No vault door swung open. When the signature lands, a bank types a number into an account. And at that moment, not before, new money enters the world. This film is about the machine that does that. Who runs it? What feeds it? What stops it? And why the answer changes how you read every housing boom, every crash, and the money in your own account. Everyone carries a story about where money comes from. Savers deposit. Banks lend those deposits on. The vault is a warehouse between the two. It is tidy. It is intuitive. And according to the people who print the pounds, it is wrong. In 2014, the Bank of England put that in writing, and the paper is still quietly radical. One question hangs over the whole machine. What happens to money when a loan is repaid? The answer is the strangest fact in this film, and it waits near the end. Whenever a bank makes a loan, it creates a deposit in the borrower's bank account, thereby creating new money. That sentence is not from a pamphlet. It is the Bank of England's own quarterly bulletin, 2014, written to correct the textbooks. Banks are not middlemen moving savings around. The loan comes first, and the deposit, the money, is created to match it. Two keystrokes, an asset for the bank, a deposit for the borrower. The pound in your account is, precisely, a bank's promise. London, the 1660s. A merchant leaves gold with a goldsmith and walks away with a paper receipt. Soon the receipts themselves are changing hands. Why fetch the metal when the paper spins? Then the goldsmiths notice the vault's secret. On any given day, almost nobody comes for their gold. So they begin writing receipts for gold that is not there, lending paper into existence and charging interest on it. Every modern bank descends from that discovery. The vault was never the point. The believable promise was. Now, count what money actually is today. In Britain, when the Bank of England wrote that paper, notes and coin were about 3% of the money in circulation. The other 97% existed only as bank deposits, numbers on the ledgers of private banks, created the way we just watched. Nearly all of the money you have ever been paid, saved, or spent was born as somebody's loan. Cash is the souvenir. Deposits are the money. Watch one loan happen in slow motion. A couple wants a house. The bank judges them good for it. On one side of the bank's ledger, a new asset appears, their promise to repay over 30 years. On the other side, a new liability, a deposit in their name, ready to be spent this afternoon. Nothing was taken from anyone else's account. Nobody's savings moved. The balance sheet simply grew on both sides at once. And the seller of the house is paid in brand new money that did not exist at breakfast. So can a bank simply type itself rich? No, because every deposit it creates is a debt it owes, spendable at another bank by lunchtime, and every loan it writes is a bet that a real person with a real income pays real money back for years. Lend badly, and the losses land on the bank's own thin slice of capital. Enough bad bets, and the bank is gone. Money creation is not free printing. It is underwriting, and the ruins of every banking crisis are the graves of banks that forgot the difference. Above the commercial banks sits a second machine. The central bank cannot stop a single loan, but it moves one number, the price of money, and every mortgage, overdraft, and business loan reprices in its shadow. Raise it, and fewer borrowers clear the bar. The creation slows. Cut it, and the machine speeds up. Capital rules decide how much banks may risk. The rate decides how much anyone wants to borrow at all. And the true break on this machine is still to come, because the strongest limit is not a rule at all. Multiply the machine by a nation. When confidence is high, millions of signatures land in the same season. New money floods toward the same houses and the same shares, and their prices climb, which makes the next loan look safer still. The boom finances its own evidence. This is why credit booms feel like prosperity from the inside. The money is genuinely new, the spending is genuinely real, and the whole edifice rests on tomorrow's incomes arriving on schedule. In 2008, the machine ran backwards. Banks doubted the promises on their own ledgers and stopped writing new ones. Households repaid more than they borrowed, and, for a reason the final act will make exact, the money supply itself began to shrink. Central banks cut the price of money to nearly nothing, and still the signatures would not come. That is the moment the world rediscovered what the goldsmiths knew. The machine runs on belief, and belief does not take orders. So the central banks started a machine of their own. Quantitative easing sounds exotic, and is not. The central bank creates fresh reserves, money for banks, and uses them to buy bonds, pushing new spending power out into pension funds and markets when the private machine stalls. At its pandemic peak in 2022, the Federal Reserve's balance sheet reached nearly $9 trillion, about a third of the American economy, conjured exactly the way a bank conjures a mortgage deposit. Even the machine has a machine behind it. Look again at the number in your banking app. It is not a claim on notes in a drawer, and there is no box with your name on it. Legally, a deposit is a loan from you to the bank, which is why governments bolt insurance underneath it and why a queue outside a failing bank is the oldest picture in finance. The system works because nobody tests it, and it is tested the moment everybody remembers to. Money, all the way down, is a ledger of promises that stay believed. Now the answer this film has owed you. What happens to money when a loan is repaid? It vanishes. The Bank of England's paper says it plainly. Just as new lending creates money, repaying a loan destroys money. The deposit hands back to the bank, both sides of the ledger shrink, and the pounds that built a house simply leave the world. Money is not a fixed pile passed hand to hand. It is a tide, created by borrowing, destroyed by repayment. And the level of that tide is everyone's borrowing minus everyone's repaying, every single day. Which turns the chain toward your own money. The rate on your mortgage is the price the machine charges to create money for you. The interest on your savings is the bank's rent for your promise. House prices lean on how freely the signatures are flowing, and recessions deepen when repayment outruns creation. Inflation, too much money chasing too few goods, is what leaks out when the machine runs hot. You cannot read a single headline about rates, houses, or inflation correctly while believing money is a pile in a... So watch the tide, not the coins. The signals that matter are flows. Are banks writing more loans this year than last? Is credit growing faster than incomes? Are lending standards easing into a boom or slamming shut after one? When credit growth runs far ahead of the economy, the machine is manufacturing tomorrow's fragility. When it stalls outright, the shrinkage arrives with a lag and calls itself a recession. Nearly every crisis in living memory announced itself first in exactly these numbers, years before the headlines. In the vault from the opening scene? Walk inside it. The shelves are clean, the boxes are ceremonial, and the great cinematic door guards almost nothing, because the thing it was built to guard stopped being a thing. The money was never in the room. It lives in the ledger, and in the willingness of millions of strangers to go on believing the ledger tomorrow. The goldsmith's secret, 3.5 centuries on, is simply the system, running at the scale of the world. The whole film in one sentence. Money is born as a promise and dies as a repayment. When a headline shouts about rates or booms or busts, ask the machines questions. Who is signing? Who is repaying? And which way is the tide moving? This has been Market Signals, how the machine works. Next, the scorecard turns razor sharp. Everyone claims their favorite company owns a moat, a defense no rival can cross, and almost nobody ever checks. Is the moat real? Whether a business can defend what it earns is the next film. Education, not advice. And I will see you there.